Meanwhile, China has just imposed new tariffs on select U.S. goods. Now, this is in retaliation to 10% duties by the U.S. on all Chinese goods that came into effect last Monday. That was the day after President Trump delayed tariffs on Canada and Mexico. CBC's Linda Ward joins us now in studio, and she's following that part of the story. So tell us a bit more of these Chinese tariffs.
Yeah, so unlike the 10% duties that Trump issued on all Chinese imports last week, these are specifically targeted at some very specific imports coming from the United States. 15% on U.S. coal and liquefied natural gas, and 10% for crude oil and farm equipment and big engine cars. Chinese policy makers not as successful as Canada and Mexico were in trying to get Trump to walk back these tariffs last week. China's foreign affairs spokesperson said earlier this week they had no choice but to fight back.
The United States has imposed a 10% tariff on Chinese goods on the grounds of the fentanyl issue. China is strongly dissatisfied with this and firmly opposes it. The measures China has taken are necessary to safeguard its legitimate rights and interests.
And Trump, as we know it, has not had a conversation yet with Chinese President Xi Jinping. The White House said that one has not been scheduled. Trump has said that even higher tariffs could be coming if there's no stop to the fentanyl flow into the United States. China, for their part, has issued a complaint to the World Trade Organization.
Okay. So we saw the effect of the trade war on global supply chains and the global economy during the Trump first administration. So what effects are these retaliatory tariffs going to have?
Well, these are more limited and they are very, very targeted. And I want to break that down into just the specifics here of what we're talking about and the effect for the United States. When we look at manufacturing in particular, the Brookings Institution has done some good work on this, saying there are about 400 to 700,000 U.S. jobs that could be affected by these retaliatory tariffs, specifically jobs in more industrial states like North Dakota, Indiana, Ohio, states that voted for Donald Trump, states where manufacturing is very big. When we look at coal, the U.S. doesn't export a large amount of coal, but nearly half of what they do comes from West Virginia. Local coal miners could be affected there. And we look at oil, the U.S. is a relatively small source of crude oil for China. It accounted for only 1.7% of total imports last year, worth about $6 billion. So the U.S. could then redirect that oil to other markets. So it's not really a huge impact expected there. Still, global management professor at Toronto Metropolitan University, Soy says any conflict between these two global trading giants is going to have a big impact.
That is, escalation lead to prolonged uncertainty in global trade, and the export controls by China on critical minerals could disrupt global supply chain for industries like electronics, renewable energy, and automobile manufacturing. All this has indirect impact on Canadian business as consumers.
But all things are not equal here. An economist estimate China's tariffs apply to about $20 billion worth of U.S. goods. U.S. tariffs apply to about $450 billion worth of Chinese goods. This is meant really to send a message to the United States, and it's clear that this isn't going to stop here.
Okay, sounds good. Thanks, Linda.